Welcome friends, I am back again with another video on stock markets this time too. In the last episode we have seen that we had looked at the external factors affecting Indian stock market, and we found to our surprise that external factors do support further rise in the stock market. Surprising because I thought it has already peaked out and now should start declining, but analysis doesn't support that. Now let us look at the internal factors affecting performance of stock exchanges in India. PE ratio, for example, price earning ratio. We take Nifty, it is around 24. It was hovering around 20, 21, 22 in the year 2023, except in June when it started going up because of the sudden increase in the price of the Nifty. But still it is around 24. PE ratio of 24 is definitely not an adverse value. You get about, let's say, 4% return on your investment. Now, look at the PB, that is the ratio of the market price to book value. For Nifty, it's again 4. It was 4 for a long time. It didn't vary too much in the past too. So 4 is again normal. There are other indices which may not be of much use in the analysis, but see, earning per share, it has improved from 720 to 820. That again is surprising. When the price went up, earning per share too went up, or vice versa. The price went up because earning per share went up. So all this finally point to scope for further uptrend in the stock market. Okay, then does that mean the market will never fall? Before coming to that, at least never fall, that the fall is not imminent. Okay, before coming to that, let us look at the impact of mutual funds in the market. Mutual funds keep on getting deposit every month. They have got that monthly investment plan or something, and this has to be invested somewhere. You can't keep it in the bank account. You can invest in debt instruments, shares. That is all the option is. So if a mutual fund manager decides that the market is falling, I will keep the money away, I will sell off and get the funds. What will he do with the funds? He can't send it back to the bank account. He can't keep it idle. So he will have to invest it. So this compulsory investment force or commitment of mutual funds is one eternal factor which aids an up market. Again, back to the question, is the fall imminent? I would say difficult to say. That is the first thing. Every prediction is like that. Prediction is just an extension or a projection of the past. Nothing more than that. Whether you use artificial intelligence, whether a lot of ratios and complex analysis, finally it is the projection, extension of the past into the future. That is, and it can never be exact or anywhere nearby, because in the last big fall, nobody predicted it. No experts, no analysts ever predicted that the market is going to fall in such a low. Then, and the subsequent rise, that was also not predicted by anybody, because they are singularities in the. If you look it up as a graph. If you look at it as a graph, they are singularities. They are a sudden break from the past. So these things can never be predicted. So prediction is just an academic exercise or an attempt to doing people, simple people like us. So before going into the prediction, will it fall at all? Let us accept one fact. Market is running on speculation mode. There's no doubt about it. I'm not buying again a Nifty share for 20,000 to earn a 1.8% discount yield. So it's not the yield that matters, it is the speculation. I believe that in another 2 months I can send it for 21,000. That is the only reason why I buy Nifty at 20,000. So market is definitely in the speculation mode. But side by side, investment also takes place. I have got a friend who does extensive research, comes up with stocks which can turn over, which can reverse its downtrend and go up on the positive axis. He does extensive research, he does fundamental analysis, he looks into the company performance, he looks into the management, he looks into the segment of the industry in which this company is working and makes a projection. And he invests in those shares in crores. Let's say a few crores, at least 1 or 2 crores invest, and such investment also is going on along in this what you call speculation market. That is one thing you have to accept. If you are lucky, you will be able to hear these experts or a debate with them on this channel. They will be definitely giving specific tips, arguments, because the research comes up with that, unlike my blah blah on general issues. So let us look forward to that. That is one issue. So the main issue, whether the market will fall or not. Markets can fall and will fall on a trigger. If we get a big enough trigger, market will fall. Once it starts falling, all the mechanisms will be reversed. All these mutual funds, no support will be of any help. But then we had that Hindenburg, Hindenburg report, which was a trigger, but the market survived it. Before that, you had that Ukraine trigger. Again, market came back from it. So trigger big enough, political, international, or even some technical snag will do. That alone will push the market down. So if you are a bear, look for the trigger. But then options is actually another aspect which pushes the market up. I'm not able to place my fingers on the direct relationship with the two, but because of options, the tendency is to go up. Options, with put options, you can make money in a falling market as well. But options somehow seem to aid an up market, a market going up. Maybe because it extends the activities range. A lot of transactions take place. Then the size of the market becomes much big. So that could be one reason. So when all these considered, I have a feeling that the market has not yet reached its peak. It has a lot of upside to go. But will you risk a prediction? Definitely not, because as I said earlier, prediction is a thankless exercise. Yet, just for academic interest, just to make this episode interesting, I would say Nifty can definitely cross 20,000. 21,000 itself is not a very, not an impossible target. But then, when the fall will start, I have no idea. This is the point which nobody can predict, and I am not risking anything there. But once the fall starts and sustains, that is more important. If just a fall, because with Hindenburg report also the market fell for a day or two, then it made a rebound. But if it is a prolonged fall, then it will be very sharp fall. Because once that fall mechanism sets in, there is nothing to block it. A lot of people will simply lose their money. Today I have read somewhere options are going to be restricted, I think. It is to be somehow going to be connected with the net worth of the investor, or what you call net worth of the market player or something like that. I'm not sure how it is going to work out. But any attempt to restrict options may pull the market down, because I think India is the biggest option market in the whole world. And as I said earlier, the big range, the extension of the market beyond imaginable levels, I mean, very broad market, the transaction market size itself becomes very big. It's a positive factor. If anything happens to that, the market may fall. Then, if you're looking for triggers, political route of BJP, for example, if Narendra Modi loses elections, definitely the market will fall. There is no doubt about it. But the chance of him losing the election is very remote. So, all said and done, let us continue to play the market. What I would advise is, if your appetite is for gambling, do some options. Within option, lot of options are available. For example, a call put option with the right combination of strike price, premium, expiry date. That's a good thing. That will satisfy your gambling instinct, and it may give you some returns as well. But keep in mind, it is an up market. So don't expect too much. Don't play too much around put options. Call option is still ruling the market. Then, as I said earlier, invest in selected stocks. That can happen. Even in a very hot, of course, not very hot, but hot market as of today, there are shares hiding in the corners. I don't remember the names. I think that I will leave it to a sport. You will come with a lot of shares and its working future and all that. There are shares lurking in the corner, waiting to be recovered, waiting to be, found out. These shares basically are low equity, low sales shares as on date, and low price shares, of course, not exactly low sales, low equity and low priced shares. The performance has been definitely bad, but one fine morning they can all come up. There are examples like that, because if you are performing in a good segment with a reasonable order book, the natural way is to come up in the stock market. Prices will go up. So there are such stocks to be picked. So take advice, put some real money in that, and then play options, as I earlier said. Now, one interesting fact is that I have no investment in any shares. I had some. I played the market rather actively an year back and lost enough money. I mean, enough means affordable money. Then I decided experience is what I gained, money is what I lost. So I called an end to it. I have no stake in any of these shares now. It is just an academic interest, purely academic. I am sitting in the sidelines and watching the movement and deriving some sort of pleasure, that's all. Now, one thing I realized is it is very difficult to do a long video on serious issues like stock market. So I will not be venturing into that in future. I will stick to short videos on silly issues. That I will continue. In the meantime, I expect our experts to come to this channel, debate issues, Probably the starting issue will be definitely the market, stock market, but we have got big experts in this who plays with the real money, who puts his own money into it and waits for and waits for the result. So they are serious players. So we can always take their advice, of course with a pinch of salt, because they also have lost at some time or the other. So finally, wait for the expert debate on stock markets on this channel, and some silly short videos from me personally. Bye.